Hello, everyone. Today on the Final Bar, I'll be speaking to Craig Johnson from Piper Sandler in Minneapolis. We'll talk about some of the key charts that are top of mind for him. The S&P pushing onward and ever upward, it appears. We had some choppiness yesterday, but really pushing back to the upside today. The S&P up almost 2%, touching that 4,400 level for quite some time. A lot of the dialogues I've been having, is this a bear market rally or is the bottom in and we are just ripping to the upside? We'll have to see what the charts tell us. Also a deep dive in the materials sector. Ladies and gentlemen, this is the Final Bar. Hello, everyone. Welcome to the Final Bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in a rainy Redmond, Washington. Thanks for joining us every weekday after the close as we focus on the market environment using the Technical Analysis Toolkit, using stock charts to better quantify investor behavior, better understand market dynamics, learn the lessons of market history, and focus on the evidence, the message that the markets provide back to us by looking at charts. Ralph Atkampora was a mentor of both mine and I know Craig Johnson's as well. And he told me early on, if you know nothing else about the markets, look at the price of the S&P 500. That alone will tell you so much of what you need to know about what's happening. And so when you look at the chart of the S&P 500, my question is, how does it appear to you? Does it appear like we're in a counter trend rally bouncing to the upside within a longer term downtrend? Or are you seeing enough evidence suggesting that some sort of bottom is in? Now, what's interesting is you actually have some competing narratives, I would argue. Forget about the macroeconomic and the geopolitical narratives, obviously, which are out there as well. But just from a technical perspective, looking at the S&P, you have the market moving lower, and overall, the momentum trend has been lower. However, over the last couple of months, we have the RSI sloping higher as the S&P is making lower lows, so a bit of a bullish momentum divergence. We'll have to look at all those charts together and see what sort of conclusions we can draw. I'm excited to talk to Craig Johnson from Piper Sandler here in a few moments. Other guests we have tomorrow, John Gagliardi, who's a technical analyst at Fidelity Investments, coming to us from New Jersey, is going to be joining us on the show for the first time. Next week, two really good guests to preview for you. On Tuesday the 8th, Matthew Tuttle. Matt is the founder of Tuttle Capital Management. They run things like SARK, the Short Arc Innovation, or actually it's called the Short Innovation Fund, but I think you can tell from the tickers what bet that is actually making. Jonathan Krinsky from Baycrest Partners is going to be joining us on Wednesday the 9th. Also, our latest episode of The Pitch is coming up next week on the 8th, on Tuesday. This is going to be in celebration of Women's History Month. We're doing a lot of programming, particularly focused on women investors, successful women investors, and Aaron Swenlin from the StockCharts team is going to be moderating a conversation, all featuring women technical analysts and traders to give you their point of view on the markets. Go to StockCharts.com/thepitch for information on that next upcoming episode. Also, all of our previous episodes. Our next segment is the market recap. Let's break down the activity in the markets today and see how that relates. The short term of today, the flickering ticks versus the long-term trends. The S&P 500 touching 4,400 a couple times during the course of the trading day, finishing just a little bit below that, but up about 1.9% from yesterday's close. The NASDAQ 100 up a little bit less, still up 1.7%. Mid caps and small caps dramatically outperforming the S&P, with the small cap S&P 600 index up over 2.7%. The VIX, by the way, is coming off. Had been in sort of the low mid 30s, coming down still above 30, which, to be clear, is fairly elevated relative to where we've been with the VIX over the last year or so, but coming off from probably the previous peak there. Interest rates pushing back to the upside. You had the 10-year yield finishing the day higher, around 187 or so. It looks like at the close. Bond prices coming off today, and the dollar index essentially flat for the day. No real movement there by the close. Gold prices and silver prices came off a little bit. This is after gold and gold stocks have been doing pretty well recently. A lot of the stocks I'm screening looking for, stocks making new swing highs. It's a lot of materials names, a lot of gold miners, gold, NEM, and other mining names as well, like Rio Tinto and BHP. That's why we're going to dig into the materials sector in a little more detail later in today's show. Yesterday, gold had been accelerating to the upside, pulling back a little bit, giving back some of those previous gains, but only down about 1%. Energy prices moving higher, and the XLE was one of the top performing sectors out of the 11 today. Cryptocurrencies all sort of coming off today. You have red on all 10 of the top coins that we track on StockCharts. Bitcoin down about 1.4%, Ether down about 1%. It's currently around 29.50. Looking at a chart of the S&P 500, again, I've labeled this a bear market rally, and Larry Williams, who did a great presentation for us last week on StockCharts TV, basically, I think in a lot of ways declared the bear market as over, sort of gave the bull case for stock. So I'm in the uncomfortable position of disagreeing with Larry Williams. I don't know how that's going to turn out for me, but I probably have a guess. But overall, I still see this as a bear market rally, and I'll tell you why. For me, I learned over time to take a step back from the charts and not just focus on the short term. And there's no denying the fact that stocks have been in a short-term bounce. That's absolutely true, and a nice V bottom in the last week, coming off the lows from the end of February. The question, though, is what is the longer-term trend? And when I look at my market trend model, the short-term and medium-term trends are still negative. When I look at the price, I still have not seen the S&P eclipse its previous swing high, get it back above the 200-day moving average, get it back above trendline resistance. All of those things would make me feel a lot more confident in a bullish reversal, indicating that a bearish phase was over, and that you're starting to see enough accumulation, enough buying power to compensate for all the selling pressure that's been expressed in the market downtrend. I'm not seeing enough of that yet, and I can't. Obviously, none of us know what's going to happen tomorrow or next week or next month, and we just have to draw on our experiences and our understanding of the technical toolkit. I haven't seen enough to indicate a reversal to the upside. What's interesting is as we look at some of the stocks and groups that are trading today, when I was scanning for stocks making new swing lows, I found a lot in sectors like financials, which is actually up the most today. The financial sector, the XLF, up 2.6% today. Energy sector was number 2, and materials as well. Technology all up over 2.2%. The lagging sectors today, communication services only up 0.8%, consumer staples and utilities up 1 and about 1.25% overall. So certainly sort of a cyclicals over defense is how I would generally describe the behavior today. But as always, the question is what's the longer term what's the longer term trend? What's the bigger picture takeaway? When you're looking at energy stocks, number 1 out of the 11 S&P sectors today, a chart like DVN comes to mind. DVN in a lot of ways, Devon Energy, which has been one of the better performing names in the sector. It's the top ranked stock in our large cap scooter universe. So that's the StockCharts technical ranking. We take a big group of large cap stocks. It's a percentile ranking basically based on their trend characteristics. The higher the number, the stronger the trend. Has a couple different time frame components to that. The number 1 stock out of all of them is DVN. And what's interesting is if you look at the top 10 stocks, it's a lot of energy names, right? You have Occidental, Marathon, MRO, you have Apache, and then ConocoPhillips. And then you also have some materials that you have an industrial name, CNQ. Let's see, we've got Alcoa, AA, Mosaic in the materials sector. So it's all energy, materials, industrials essentially in the top 10 stocks. I have to tell you that is pretty unusual, and it was not too long ago when it was all tech and communication names in the top 10 for sure. Names like Tesla, dominating the top of there. But you've seen these other sectors starting to more and more appear on the list. So when I'm looking at the chart of DVN, I'm thinking of my conversation yesterday with Dale Pinkert. There's no denying energy has been the strongest sector, and it's not even close, up over 30% year to date, while the second best sector is probably flat, if not a little down for the year, all right? I mean, there's a big gap between energy and everything else. So the challenge is how far can a chart like DVN or any of these others that have done so well, how far can they go before you get some sort of downside move, before you get some sort of pullback to digest all those previous gains? The interesting thing is you really have not seen a huge pullback in quite some time, right? If you look at FANG, Diamondback Energy, pulled back in October, November, December, which really ended up being more of a consolidation phase before you resolved that to the upside and pushed higher. So, it's interesting. The clear leader has been the energy sector. I'll be interested to see what some of these names do. The good news is they can pull back in general quite a bit and still be within the definition of a fairly healthy trend. Looking just to finish off our market recap, I just wanted to look at the Mindful Investor live chart list. This is a list of charts that I keep updated on StockCharts.com. If you go to the articles tab at the top of our website, go to my page, which is called the Mindful Investor. You can get to this list of charts, which I keep updated. And again, thinking of how you label this current market and how I've decided to call it a bear market rally. This is a chart that comes to mind. These are the cumulative advanced decline lines for the S&P 500, for the S&P mid caps, the S&P small caps, and then the top one in red is the NYSE common stock only advanced decline line. This is basically looking at the daily advanced decline data and taking those and taking a cumulative set of that data and looking at the trend overall in advancers versus decliners. All four of these, I would argue, very clearly are in downtrends in the last month or two, right? In the last 6 to 8 weeks, they've all been trending downward. Some of these for a little bit more. And what's interesting is November into January, you can see two of these actually made a lower peak. So the NYSE advanced decline line, the small cap AD line, both made lower highs, while the mid cap and the S&P made higher ones. The only AD line that is yet to break down and confirm more of a bear market phase is the S&P, which is why that index continues to look pretty good relative to others. However, I think this market is very close to confirming potentially a new leg lower. This would be a chart to watch to determine whether, if and when the breadth conditions improve to the point that you can be comfortable feeling more of a risk-on environment. We need to take a quick break. We'll be back with today's guest, Craig Johnson. We'll see you in a minute. Hello, everyone. Welcome back to the Final Bar. This is Dave Keller here at StockCharts.com. So good to have you join us every weekday after the close as we break down the markets using technical analysis, using the technical toolkit to better understand what the markets are saying back to us. A couple quick announcements before we get to today's guest, Craig Johnson. First off, we welcome your questions. We'll do another mailbag segment on Friday's show of this week, and we'd love to feature your question on the air. You can email us any questions at thefinalbar@stockcharts.com. Our Twitter address is at FinalBarSCTV. We're on YouTube. Put a comment below the video you're watching on our Stock Charts YouTube channel. We'll gather all those questions. Hope to answer one of yours live on the air on Friday's show. Also, go to StockChartsTV.com. That is our on-demand platform. It's completely free. Special events like The Pitch, Larry Williams' Market Outlook from last week, Martin Pring's Market Outlook from January, which was really well done. Special guests like Craig Johnson, Tony Dwyer, Gina Martin Adams, many, many more. All from our website, StockChartsTV.com, or on your mobile device, just search for StockCharts TV on demand. I want to welcome on today's guest, Craig Johnson. Craig's the technical analyst at Piper Sandler, coming to us from Minneapolis. Craig, it's good to have you back on the show. Welcome.
Thanks, Dave. It's great to be back.
So we have obviously so many competing, I feel, narratives in this market. At the end of the day, it's what the charts are telling us. We're starting with the S&P 500. How are you interpreting the current market?
Well, Dave, let's step back and simplify. I mean, you are correct that both one of your mentors and mine is Ralph Acampora. And I guess what I would say is what he always drilled into our head is if we're making a lower low and a lower high, just looking at that chart of the S&P 500, you would have to very easily come back and say we are in some form of a downtrend. And that's exactly where I think we are. And that 4,300 level in the sand that you've got drawn in there right around that yellow line is going to be a really important level to watch in coming days. From my perspective, if I go through our data here at Piper Sandler, what I'll tell you is going through the data through yesterday, we have a lot more groups making new lows and new highs. 109 of our groups out of 406 are making 26-week new lows. I've got 28 that are making new highs. And if I go through and look at our trend work, Dave, I've only got 20% of all the stocks in the market in some form of an uptrend. So I guess what I'm saying is I agree with you, Dave, that this looks like a relief rally more so than anything else. And I agree also that that 200-day moving average and that downtrend resistance line you have up into there purple are going to be the key determinants I've also been looking at some of the other indices. If, for instance, throwing in the Nasdaq index itself, we're a little closer to reversing that longer term downtrend, Dave. But at this point in time, all the popular averages are not reversing the downtrend yet. So they're all setting up in a very, very similar manner from my perspective. So I'll be watching that. Now, let's shift gears if we could, Dave, and take a look at what we see happening with 10-year bond yields. And 10-year bond yields continue to us. Uh, they came in really hard the other day, but that kind of 169, 170 level on the chart is going to be a big area of support. Our forecast is still 175 to 2% for all of 2022. And I think what you're seeing with the price action today is people are excited that yields have come back down. It's sort of breathed a little bit of life into the growth discussion and growth components of the market. Hence, we've seen a pretty decent move in tech today, up 2.19%. And we also have seen financials rebounding nicely with rates rebounding today, coming back up to that 185, 186 range. And that is, we really reverse a lot of what we had seen yesterday, which was a big safe haven trade that was playing out. Now, let's also take a look at 10-year, taking a look at crude oil prices. I think that's the next real big chart to take a look at. This is a worrisome chart, Dave. If you put a channel on this going all the way back to October of 2020, you can see that we're sort of getting to the upper end of the price channel, but there's no indication at this point in time that we are breaking down. Prices are clearly going higher. 110.70 was a level that we've been watching here at Piper. And I'd also point out that 115 is another level to be watching on crude oil prices. But I got to tell you, this is going to be squeezing the consumer. And as I go through and I look at all the charts, I would agree. Devon Energy looks like a constructive chart. Pioneer looks like a constructive chart. It is also one of the strongest sectors for us and one of the groups that we remain overweight at this point in time. So if we take also another look at the XLF, Dave, taking a look at financials, this is something we're going to need to watch very carefully in here because I'm starting to see some breakdowns in stocks like Citigroup. Obviously, there's a conflict happening right now in Ukraine with Russia, and I think there's going to be some contagion fallout. So keep a very solid eye on Citigroup, JP Morgan, and the rest of these financials that comprise a big part of the XLF. I'll remind all your listeners that when we saw a divergence in financials versus the rest of the market, as we did in 2008, that was a sign of a more difficult period for the market, obviously the great financial crisis. And then lastly, Dave, I think it's important to go have a conversation taking a look at an individual company, Helmerich and Payne, ticker HP. I think this is a fascinating stock. You can see they've been sideways consolidating on a shorter term chart. But if you go back and look at a weekly or a monthly chart, you're going to find that there is a great downtrend reversal happening here in Helmerich and Payne. And clearly, at this point in time, we need to start drilling, start becoming energy independent. And this is one of the more interesting looking stocks for me that has not been discussed quite as much in the popular press and media.
It's such a great. There was a little mini masterclass in how to invest as a technical analyst, Craig. That was awesome. But it's interesting. I mean, as you look at all these different competing themes, you see a sector like financials, as you mentioned, charts like Goldman and others, Citi testing and potentially breaking down through key support. But then you have plenty of names like HP and others that that are rotating to the upside. So certainly seems to be opportunities out there if we know where to find them. Craig, listen, it's awesome to see you. Appreciate you coming on the show. Stay safe, be well there in Minneapolis. We'll talk to you again soon.
Thank you, Dave.
That's Craig Johnson. Craig's the technical analyst at Piper Sandler, coming to us from Minneapolis. Craig has a wide following in the institutional community. Used to love talking with Craig regularly in my Fidelity days. And you saw just with that little summary of how he's paying attention to some of those different inputs, how you put together a legitimate investment thesis, thinking about all these different trends and where they're at. That last chart was fantastic because I think as you're thinking of the market environment, as you're thinking about potential weakness in stocks and again this downtrend of lower lows and lower highs, there are names that are breaking out. When I was looking earlier today for my market misbehavior premium members, scanning for stocks breaking to new swing highs and new swing lows. I wasn't struggling to find stocks breaking to new swing highs. I also wasn't struggling to find stocks breaking down. So I think that's a great takeaway from a good conversation there with Craig Johnson from Piper Sandler. Let's continue on our next segment called the Sector Deep Dive. What we love to do occasionally is take a step back, look at one particular sector, dig in a little deeper, and start to talk about some of the different themes and different charts we can uncover. We've hit a number of different sectors over time. I thought it'd be interesting to look at the materials sector. Materials is an interesting sector because it's a relatively small weight in the S&P. It's almost a rounding error compared to some of the larger sectors like technology, like consumer discretionary, which are obviously a lot of market cap. You have a lot of mega cap names in those sectors. Materials is actually a much smaller sector, but there are some key groups that are represented. And what's interesting is if, as I mentioned, you look at the top performing stocks, you look at the top names in our scooter rankings, besides energy, you're going to find a number of materials names, things like Alcoa, things like Mosaic, both in the materials sector. So let's look at a couple of those, just kind of break down some of the themes that we can pay attention to. If you've never really done a deep dive in a sector, a couple things I would suggest to you. Number one, I always say it's interesting to start with the RRG. This is the relative rotation graph. This is Julius de Kempener's design, which is a way to visualize the 11 S&P sectors. You can see energy as the far outlier performing well. Some of these growthy sectors like consumer discretionary technology heading to the lower left, the lagging quadrant. Materials is right here. So on an overall basis, it's not far from the benchmark. You can tell because it's one of the closest to the zero, right? The crosshairs in the middle, which means it's not really differentiating itself overall off of the benchmark. However, some individual names are there, certainly are, and materials is an interesting sector because you have stocks breaking out, but I think you also have some stocks breaking down. Second thing I would do is if you click on charts and tools, and on the right, look for something called industry summary. This is a really cool feature on StockCharts. I like to use the table view, and if you go down to the materials sector, if you want to understand what groups are in the materials sector, what types of stocks are we talking about, you can see them all listed out here. And you can sort them in terms of their scooter ranking of the individual industry groups. So we can see out of the 10 or so, I think it's about 9 groups that make up the materials sector, you can see aluminum, non-ferrous metals, steel, the top 3 according to the scooter rankings. On the bottom, you have paper stocks, commodity chemicals. So when the materials sector is not doing well overall, it's because you have some top groups like aluminum, you have some really weak groups like paper, some of the commodity chemicals names that have been breaking down. And so it nets out to a sector that's not overall doing particularly well. But it's worth noting that 5 out of the 9 have a scooter ranking above 90, which means overall they're in the top 10% of all the industry groups, about 105, 106 that we track at StockCharts. All 5 of these are in the top 10. It's the 3 I mentioned earlier, as well as mining stocks and gold mining names. So let's look at a couple stocks within those particular groups that I just highlighted and see what the charts can tell us. When I'm thinking of the materials sector right now, the first thing I would go to is some of the gold miners. And we've talked about the improvement in the mining names recently because some of the stocks that have been emerging from what I would call a rounded bottom are things like Newmont Mining. It's a good example of what that means. A rounded bottom is essentially, if you think of a V bottom, right? Think about what the market did in February, March 2020, where it shoots straight down and then turns on a dime and goes right back to the upside. This is sort of a completely different way of bottoming out. It's more of a slow, gradual transition from what I would call a distribution phase to an accumulation phase. So the 3 phases that I would describe in any chart are distribution phase of lower highs and lower lows, a consolidation phase or an equilibrium phase of consistent highs and lows, sort of a range-bound period, and then an accumulation phase, higher highs and higher lows. And most charts you can label as one of those 3 phases, right? Accumulation, distribution, or consolidation. Here you see all 3 represented. You see this transition from a chart going lower, a chart going sideways, a chart going higher, and that is the type of chart that I want to capture. That's why I screen for stocks making new 3-month highs, because that's when NEM and other names like this started to bubble up. It was here in December when it actually finally broke out of this base that it had been building for about 3 or 4 months. So I love how that chart rotated from a downtrend to a sideways trend to now an uptrend. You can see that the stock is starting to outperform really since late November. It's the relative strength has been improving. The price has been improving. This is as gold has emerged from its own base. This is as gold has actually started to follow through as an inflation hedge, as the dollar has come off a little bit and weakening versus some other currencies. It's giving gold space to do well, and gold miners like NEM are doing pretty well as a result. Other names in this group that look pretty similar. Rio Tinto, RIO, GOLD, which is Barrick Gold, you can see also breaking out of a base and breaking out to the upside. And while they've already jumped up, I don't think there's necessarily a reason why it would need to exhaust. Right? There's not an exhaustion pattern that I would see just yet. You're seeing a trend build with higher highs and higher lows, and that's what you want to you'd want to see consider continuing. Other names you may not be familiar with, maybe smaller names, something like SBSW would be one. SCCO is actually a copper company, but you can see how this is rotated as well. It looks a lot like the gold names that we've talked about so far. Nice rotation, what I would call a rounded bottoming pattern. A couple other stocks I would highlight here, and then, man, we're already out of time. I wish we had so much more time for these deep dives. Freeport-McMoRan is a pretty widely followed stock, $70 billion market cap in the materials sector, making a new 52-week high in the last week. And again, this is breaking out of a base over this period of time. It's really a cup and handle pattern, which is a rounded bottom. Then you have a shallower pullback here, and then a very consistent resistance level. We've now broken that to the upside. That's a pattern that is pretty widely followed, tends to measure a lot higher. Now, also in the materials sector, you have things like Mosaic, which have just been really strong charts, outperforming on a relative basis, making new highs on an absolute basis. It's not all fun and games in the materials sector, and things that I would highlight that are starting to show some weakness, things that are rotating lower. It's something like SHW, Sherwin-Williams. Corp BLL is an interesting one to watch because it's really been more sideways. It had an opportunity to break out of a range, but really has not been taking an advantage of that at all. Paper was one of the worst groups out of all of them in the materials sector, and IP shows you a good example of why that group has been struggling so much, making a new swing low. So again, the materials sector is an interesting one to do some new highs, some new lows as well, but I particularly focus on the mining names where I'm seeing some renewed signs of strength. We need to wrap the show. Go to the 3 and 3, 3 charts in 3 minutes. Here we go. Chart number 1 is what I call the chart. It's probably the most horribly labeled thing ever, but every month or two I create a new chart and I call it the chart. And what I try to do is just take all the key things that I'm paying attention to and put it in one place so I can track them. And this in general tends to be sort of a general risk on versus risk off type of read that I'm looking at. This is what I set up in November, and this is when the market was making new highs. So I created this chart here as everything was confirming the uptrend. The S&P was making new closing highs. The AD line was making close to making new highs. The consumer discretionary sector was outperforming consumer staples, and S&P was outperforming utilities. Plenty of new highs on the market. All of that thumbs up. From the moment I created the chart, look at how all of these have transitioned to more of a bearish phase. You have the S&P making lower closes, the advanced decline line trending downwards, consumer staples outperforming consumer discretionary, and utilities outperforming the S&P by the fact that that line is going down. You're also seeing a non-zero number of new lows. And so this is an important chart, I think, to watch as you're trying to gauge if and when there is a bull market recovery. Those indicators would have to turn higher. They are not turning higher yet. Finally, other charts that I came up in my scan for stocks on the move was LVS. Is one of the top performing names today. It's up about 10% today. And what's interesting about the move today, this is after yesterday's selling off and trading down to right around $40 a share. It whipped around and got just above $44 today. What's interesting then is in the last couple trading sessions, you may have established sort of a higher low here, right? You had the gap higher in January as we gapped above 40, went to around 42, traded up to 48, and then back down to that same level. 40 was sort of the upper end of that gap, so we filled the gap on the way down. That is a really natural stop for any sort of long position. In general, if you're taking a position in a stock like this, I always look back to the most recent swing low and make sure we stay above that. So 40 is a key level I would argue to watch in LVS. Finally, today we did a deep dive in the materials sector. I had a lot of fun there talking with Craig Johnson with some thoughts on energy and financials. I can't disagree with a lot of his conclusions. A third sector I would be paying attention to is materials. Commodities have been strong. It's not just energy, but it's also gold and others that are starting to do pretty well. The DBC continue to push to new highs. Mining stocks are starting to emerge out of rounded bottoming patterns. NEM is a great example of that chart. That is our show, folks. Thanks so much for joining us every weekday after the close. Special thank you to Craig Johnson from Piper Sandler joining us from Minneapolis. For StockCharts.com in Redmond, Washington, I'm Dave Keller. Be safe. Have a great night.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.